What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol POWW for Ammo Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it just the other day, but what I need to make you aware of is that in the after hours, they gave us that earnings announcement finally, so let's flip on the extended hour session and see what's going on with the number. Quite a bit of green on the screen here, so it looks like we'll likely be opening on a gap up, right? We want to know where today's high was, essentially, and we're sort of finding some resistance right at the top end of this prior range, which is very interesting, right? So you tell me, technical analysis, does it work, does it not? I would say it works, and here's a pretty darn good example of that. Anyways, so let's call that the overnight high. Let's say that the anticipated opening print will be here around 760, we'll call it. Let's take a zoom in and closer look at the daily here. So these numbers are very, very close together, and by the time 9:30 and the bell actually rings tomorrow morning, it's likely that these two numbers will not be the same. Maybe we poke back up higher through it. Maybe the open is a little bit closer towards today's high. Doesn't really matter. What we're about to discuss is a framework that you can apply to any situation. So the first thing we always think about whenever we're dealing with a gap, could be in either direction, is the gap and trap. So this is scenario number one. How does it unfold? Well, we open here, fail to attract new buyers up and over this zone of resistance, basically the overnight high, right? And then we trade short back down through the open to fill the gap down towards today's high of day at $7.40. Now, don't get me wrong. Are you actually going to short this thing? Let's come on over to the trade tab. What you'll notice is that it's hard to borrow, so you're not going to short the shares, and the options volume here is absolutely pathetic on the put side of things. So you're not actually going to short this. You're just not going to be a buyer if that's what starts to unfold. Exercise some patience and wait to see what happens at the gap fill area. So let's go back on over to the charts. What I mean by that would be if we do something like this, short here for the move lower, start to look for hammer candles that print here on the gap fill. That would be a gap fill reversal play, right? Anything that looks like an indecision doji, basically candles that make you question, is the pullback over? Is the gap fill all we're going to get? Can we use this area as a higher low? So something like this, and then break out up and over that area of resistance, the overnight high, as well as the daily area of resistance, which we just pointed out. In that instance, we know that there's quite a ways overhead to run. The next major area to pay attention to would really be from in here at $8.68. Now, I'm not saying that this here is going to unfold all in one day. That would be kind of crazy, right? Obviously, anything can happen in the marketplace, but odds certainly do not favor that. I'm just simply saying, from a structural standpoint, those are the numbers to be watching. Now, the flip side of this coin would be the gap and go, and I'm sure this is the one that a lot more people want to see. That's where, if we just zoom back in a bit here, if we open here, sort of consolidate right at the highs, never really violate the open or make some significant push to the downside, a break of the overnight high takes us higher, again, through that area of daily resistance. Now I have to scrunch it back up. Maybe there's a bump in the road here, I suppose, right around that $8 mark. It's the upper wick from in here, cherry picked, but it would look something like this, okay? So breakout higher, maybe higher low pullback, and then we get into that 868, which we just identified from these areas back in here. Again, does it happen all in one day? Maybe, but the odds certainly wouldn't favor it. If we look at the prior earnings cycles, look at the approximate ranges of these candles in here. So I would say, again, just based on pure history here, if we put in the most optimal bullish bar, we're kind of on par with maybe 850, and that's pushing it to the upside here. So those are my thoughts inside of POW. We'll ultimately have to see if at the bell we get a gap and go or a gap fill reversal. Remember that those numbers are subject to change, but the framework and what we just discussed is not going to change ever, okay? So that's going to wrap it up. If you enjoyed the video or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.